Hi, this is Kim Watson. Welcome to a weekly review. Sorry, I've missed it a few weeks. Been away on holiday, came back, forgot about it. Seriously, um, no, it was just so quiet, and I was sort of late back, and the bank holidays and everything else. That's my excuse. Anyway, sure. So moving on with the markets, but before I do so, we've had some good key news out. We had non-farm payrolls last week. We had some PMI data. We had some good volatility. We had an August overall that's had some decent daily moves in it. So it's been an interesting one. A lot of our traders have done particularly well. I would just like to talk about a subject that came up, and it was on the YouTube videos that we do because we copy it onto YouTube as well. And there was quite a bit of discussion going about trading, for example, the non-farm payrolls. And the idea is let's just assume this is the price that you just say put a buy limit up here and a sell limit down here, and you wait for the news to come out. And Bob's your uncle. It hits your buy limit. You set a target of say 30, 40 pips, and you're in the money. Now, this sort of thing used to work, and it could possibly still work with a very small account size or very small trade size. But I'll show you an example of why, if you were trading the euro, you'd get into trouble on something like that, could possibly easily get into trouble on something like this. And why Charlie, I mean, he demonstrated his live trading. He did it in a certain way. To be quite honest, I haven't seen it. I didn't watch the video, but I know he trades it post news, and it will take a stance on how he's trading it and trade it. And we did exactly the same in the live trading room that afternoon when the news came out. We saw something. It set up on actually set on my inflection point indicator, gave us a bit of a signal. We took the trade and we traded it. But this particular way of trading, I used to trade doing this many months, almost 18 months, 2 years ago. But since the Swiss situation, it's been very difficult to do this on non-farm payrolls. It used to be quite a simple one to do, and it may still come into play. But as I said, with nowadays with very small positions, because what's happening, and we've spoken to a number of brokers, and in particular ETX. Richard Wiltshire, the head of the trading floor there, explained to us is what's happening when it's coming to non-farm payrolls or any of the key data points. It's basically all his banks that provide liquidity. So he has a number of banks that they're all offering liquidity, and generally there'd be plenty of offers there for him to be buying or taking or whatever positions. All of a sudden, they're all switched off effectively. They're not interested in playing in the market. So effectively, it goes very, very bitty. And it tends to, of course, happen just leading into it. So I'll give you an example of what happened on, this is the euro dollar. This is what happened on Friday. I can just flick it back because it was not very far back. There we go. And this was the 5 minute, sorry, there's a lot on this chart. In fact, what I might do is just do this, and we'll just run it back into the 5 minute chart, and you'll see the 5 minutes leading up to the news. It would have, bearing in mind this is the new candle, it would have taken you out. It gapped here, but this particular candle beforehand would have taken you out, because what this candle isn't showing you is the spread that went on top of this. What is happening, and there's not a lot of choice about this, is that the spreads, most brokers, and I'm watching them. I've got a summary sheet of many brokers, and the spreads literally widen out like this. The other thing is, if you try and put a trade in just literally seconds beforehand, it is very difficult. Some brokers may let you. Any size, you definitely won't get the fill or the order in or the position in, because there won't be another side to it. People are not wanting to put sides to it. They won't be able to offset it. So you get this widening of the spread. Plus, you get this happening. You get the volatility. You get the people that are trading things. It may be banks that are having a go at this. I don't care what it is, but the volatility came in. Now this would have taken, is a plus or more than plus or minus 20 on this, would have taken and put people in or out of trades. I believe it flicked up first, pulled back, would have taken the stops out, flicked back up, if you sat there without stops on this sort of situation, you shouldn't be trading. So certainly it's far too risky. You'd never know what's going to come out. So overall, sorry, I've gone on for about 5 minutes on this, but it's important, very important that you understand what's behind the market. The fact that the spreads will widen, the volatility that you'll get in often before the actual news comes out, and often it flicks the wrong way because people think they know what's going to happen, and then you get the reaction. Why not wait? There was plenty of opportunities post news to be doing different trades, whether they be shorting against the. I mean, we had an inflect. You can see the indicators fuzzing red here, and signalling strongly overbought. There was more to it than that. The reason why we actually took a short on the market, but on that particular position, but we waited and then we were patient. But anyway. That's that. I needed to get that out of the way because it's on there. Now, one other thing I would say is if you're going to make comments on YouTube or you'd like to leave a comment, rather than do it on YouTube, if you could do it on our website, we pick them up more frequently. I only saw these comments more recently, so please, if you want to talk about the trading videos or whatever else, please do it on our website. Right, enough. Right, very quick run through of the markets. This is going to be very quick now. I'm looking firstly at the euro dollar. Now, this week, what we've seen here, or the 2 weeks prior, we've had 2 down weeks here, which is not looking particularly strong at the moment. Coming down to the dailies, Friday put in the shooting star back into the monthly pivot. If we start breaking the 50, 200 MAs, I think we're on towards the downside, maybe down towards the monthly S1. Certainly, we've got the target at the 1050 sort of zone where we came down to in early August, but I wouldn't be surprised if we run back down to that 1014 area. Now, of course, a lot of this hangs on the sort of comments and etc. from the US, and won't they increase interest rates sooner or later. Now the expectation now is already not September, maybe December, or November, December. I think it's December. Now, so that's out of the way. But what we have got, of course, this week on Thursday, I think it's Thursday, is I'm going to have to quickly look this up now. Is we're going to be looking and just checking here. It's Thursday, isn't it? Tell me. Yep, it is Thursday at 1:30. We've got the press conference and we've got the minimum bid rate at 12:45. So 12:45, we've got key news for the euro. It may be a bit choppy before then. There's not significant data out that is euro based. There's not a lot of US based data before then, so either side of the trade is not massive before then. Actually, sorry, we've got services PMI tomorrow, which could be a bit of a kicker at 3 o'clock. So from the US, which could give the euro either a more of a kick in or help it recover a little bit. But for now, it's looking to me bearish. It becomes certainly bearish if it breaks that 200. Okay, cable. Interesting. I'm still bullish on this. I've been bullish because my signals told me to be bullish on the weeklies. It was several weeks ago. Got the oversold signal coming through here, sound, and to me it's looking like it's eventually working towards its weekly 21 and coming back into the zone, filling that gap potentially anyway. So it's looking rather bullish. Good data coming out that's backing this up. The PMI data on last Thursday gave us this big move up and broke the prior highs there. We've been chopping around different time frames, and it broke the prior highs and pushed right away through them. Actually, it was the previous 3 days was in a very tight range, kicked out of that. Took all the stops, pushed everything through. Today, again, we've had some decent data coming out. Friday, we had some decent data-ish out. It held on a lot better than the euro, didn't sell off so much. Today, it's some good data. It's struggling a little bit from a daily perspective, maybe edging a little bit. It's not overbought or anything yet. It's quite clear to carry on, but we'll see. News-wise, we've got the ISM. Where's that? Sorry, it's not the ISM. It's the manufacturing production figure on Wednesday, which may affect cable more than anything else. Of course, tomorrow's US non-manufacturing or the services PMI in at 3 o'clock also may give it a move either way, some volatility. But certainly from a UK basis, We've also got the inflation data on Wednesday, so there's plenty of data coming out on Wednesday that may just give us a bit of a kicker. Thursday, I'm just looking at unemployment claims. That's just a weekly figure. There's nothing significant for cable or the US dollar really on those days. Okay, so that's cable. Quickly moving on, yen. I find this one a strange one at the best of times. We've seen this sort of weakening over the last couple of weeks, heading back towards its weekly 21. It got so close to it last time, never quite made it. It's edging towards it again, but won't it? It's certainly looking good on the dailies, but it's got the monthly pivot untouched below. Its probability is pretty high that will get hit, so maybe we'll have a day or two of it coming back, testing that. Break below the 50 gives us probably not very much in the way of targets, but if it still carries on selling off, maybe that's the point for it or the target for it. But at this moment, I'm still erring more upside potential there. It has broken. There's a trend line running down here. I haven't extended it, just extend it a little bit further from way back, which is properly tested. Now it's tested the broken and closed above it, testing it again from the top side. Now it'll be interesting to see if it can hold. But it's erring to the bullish side, unless of course then it starts breaking the lows of Friday, and in which case I'd expect it to be pushing down towards the monthly pivot, maybe further down. Looking at the Aussie dollar, been weird old price action going on here. Weekly wise, we've had 2 weeks definitely down. Last week was a bit of a doji week. We've broken this trend line that's on there. It's just holding on, and it's just hanging in there on the again the weekly 21. From a daily perspective, well, I'm still erring towards the bearish side of things. It really needs for me to look bullish or be trading the long side of this. I'd rather be seeing the price above that 500 MA. But I'm just waiting to see if this little bear flag in this sort of picture here so it lets us roll over and heads back towards that monthly S1 area, maybe the MIDI there as a part target, but just watching at this price action. Finally, the Canadian dollar. Oh, sorry, Aussie dollar. Let me just check. There is data coming out tomorrow on that. Tomorrow on the Aussie dollar. So we'll be aware of the Aussie dollar for tomorrow. There's interest rate statements expected. Not expecting any changes, but the statement itself that comes out later around about 5:30 or after 5:30 may give some volatility depending on what's said, of course. So that's tomorrow morning, early morning. I'll probably set the tone. It does seem to be trading pretty steady and flat the rest of the time. The rest of the week, there's a trade balance coming in on Thursday early morning, 2:30, but not a lot else in significance. The trade balance may give a bit of a kicker. Okay, Canadian dollar. Now, the Russians and the Saudis have agreed a bit of a deal on oil. As in they're talking about having a bit of a deal on oil, which may steady the prices, in which case may help the Canadian dollar to the downside even further. Bear in mind it's US dollar, Canadian dollar. We've run back in on a weekly basis, put a shooting starry sort of actually more graveyard doji sitting there. We could be heading south a bit further yet from what I'm looking here. If we see a definite break of this trend line here, make it easier, but perhaps we're heading south anyway. Seen a couple of good down days. As I say, really you could be drawing trend lines across a number of places here looking for the downside, but to me it's looking to the weaker side, and the fundamentals around the oil prices may help a little bit. Just run to the dailies on oil, and it picked up a lot better earlier on. It's seen a bit of sell-off. Still got to watch this because the talks have been agreed. It doesn't mean to say it's immediately going to stop anything, but on the longer term frame, maybe we'll see a more steady price coming out maybe as the year progresses. But for now, I'm still erring for potential downside, particularly from this daily basis if it carries on like so. Slight daily basis, but expecting more steadiness there. The Canadian dollar, I'm expecting more downside. That's for sure. Okay. News-wise on the Canadian dollar, we have got data coming out, employment data next Friday. They've got non-farms equivalent, the employment report coming out on 30 on Friday, which is quite a key one, can give us a nice movement in there. Aside of that, there's the central bank statement at 3 p.m. on Wednesday. So got two big numbers for the Canadian dollar, which should affect the Canadian dollar this week. Right, so that's pretty much it for me. So plenty of volatility or potential volatility and numbers to come out. Hope you have a great one. Bye for now.